Well, folks, if you've been in the stock market recently, you probably got your flapjacks flipped the wrong way recently, okay? It's been bad out there. Bad. And I've been covering on the channel for the past week or so about all this devastation going on in the market and how much the NASDAQ's going down in these stocks and all the doom and gloom, right? But it's very important to keep your head in this sort of market. And I have some actually really good news to tell you guys today about the stock market, which right now you can't get good news anywhere in this stock market. You turn on TV, it's bad news. You turn on YouTube, it's bad news. You read articles online, it's bad news. Everywhere you look, it seems like it's just the end of the world for the stock market. And I spent this morning looking at a lot of different things, different metrics, different things about money on the sideline, and 7 different core points I actually want to point out that are actually rather encouraging if you are in the stock market right now, that are actually something to like feel good about. Let's put it that way. So obviously, in terms of the pricing action, there's nothing to feel good about. And, with me covering all this bad stuff that's been going on in the market, the last thing I want to become is a doom and gloom channel where every single video is negative or something like that. We need to cover those sorts of things and all the bad stuff going on in the market. But we also need to cover the bright side, right? Because if you're just one-sided all the time, you're not seeing things objectively, right? If you're always seeing things as doom and gloom, then you're not seeing things objectively. If you're always seeing things as perfect and there's nothing wrong, that's also, not healthy either, okay? And so, yeah, I hope you guys appreciate this. I appreciate you guys joining me, and I hope you get a good amount of value out of this video here today. Alrighty, this is extremely important starting right off here, okay? Make sure to subscribe to the channel if you're not already, okay? This is extremely important. What we're looking at now is updated forward P metrics for the stock market, all right? So, first thing I want to start out with is S&P 500 in total. So we're at a 19.6, so that's dropped off quite a bit. Now we're still trading rich. So what this means is the biggest of the big still need to come down more. And those sorts of stocks are like Apple, Google, and many of the other biggest companies in the world, we still need to come down, okay? And so that's something to keep in mind. However, the great news is now S&P 400s are trading about the cheapest they've traded in a decade, okay? That's the blue line there over time. And essentially, if we go back a year ago or so, S&P 400 was trading extremely rich. We were trading at valuations on the upper tiers that we've been trading at any point in the past 15 plus years. And so right now we're trading extremely cheap for S&P 400. We're even trading cheaper for S&P 600. Now we're down to a 13.7 forward P for S&P 600. Okay? You have to go back to this little time period in like 2011 to find a time period where we were trading this cheap. That is the green line. And so we've gone from a market where essentially the smaller cap stocks were extremely overvalued. Literally at this time last year, January of 2021, small cap stocks were trading extremely rich. They were all massively overvalued, to now we've actually shot way too far to the downside. And not only are these stocks undervalued, but they are massively undervalued. And when you look at these metrics, it's extraordinary. Like when you're trading the cheapest you traded in a decade plus, you're trading extraordinarily cheap. So it's a funny market we're in right now. I've never seen this sort of market since I've been in the stock market for the last 14 years, where S&P 500 is still trading rich and we still need to drop more there. But yet, S&P 600 is trading that insanely cheap. Like that's crazy, because usually how this works is S&P 600 trades much richer than where S&P 500 is. But yet we are in a flipped market right now. We're in a flip and flapjacked market right now where S&P 600, remember this time period we're going through right now, because I can tell you this is not how a market usually acts. And so I think it's important to remember this time period as a freakish one-off, and we can look back in time and remember and be like, remember when S&P 500 was trading really rich and S&P 600 had fallen through the floor, because that's exactly what we've seen. And if you go throughout history, this is not normal. This is the furthest thing from normal, okay? So that is pretty darn extraordinary. If we get another, a big weakness in the market again this upcoming week, guys, I mean, we're going to be lower than we've been at any point in the past 15 plus years for S&P 600s. It's extraordinary. It's nothing short of extraordinary, okay? Second thing we got going for ourselves in terms of good news in the stock market crash, or market crash in general. I shouldn't just call it stock market crash, because basically everything, right? Real estate's probably next, coming in the spring. But essentially, what's going on here is we got the weekend. Thank goodness. Okay, the weekend is bailing us out right now. So the weekend's great because you get this time period to actually think for a moment. Do I want to sell out all of my stocks? Do I not want to do that? Like what's going on here? And it's kind of like, you guys ever watch football? Sometimes there's a team that's driving the ball down the field and they're just, converting and the coach says, timeout. We're going to call a timeout. Give the defense time to regroup. The offense hates it. Like, oh man, we're marching the field. We want to score a touchdown. They're slowing us up. We need that in the stock market right now because we were just in free fall. And it's like, timeout. Can we get a timeout and just kind of regroup here and think this out? Do we all want to sell right now? Like, what's going on here? And if you look at the Bitcoin market, the crypto market, unfortunately, doesn't have timeouts. There's no such thing as that. There's no weekends. There's no time off. It's constantly being traded. And so right now, Bitcoin is just falling through the floor right now. And Ethereum's even worse. Ethereum is just, just in the past 2 days or so, just tanked down massively. So that's some good news. We got a timeout. We needed that, okay? Third thing, this is very, very important, okay, is if you're thinking about the market, how the market's feeling right now. Well, the NASDAQ's already down 12% year to date. We're 3 weeks into the year. That's an extraordinary move this quick. We're on pace for the worst NASDAQ in the history of the stock market in the month of January, all right? So that is should give you some comfort, actually, that being that we're in that type of capitulation market right now. And when you're starting to reach capitulation, that is something that, I don't want to say you're at the bottom, but you're getting pretty darn close. When the attitude in the market starts to become sell now, ask questions later, you're getting much closer to a bottom than any other way. Let's just put it like that. Because, that's the activity we saw, especially Friday. We saw this throughout the week, but especially Friday, where folks that, you would even think have, let's call them diamond hands. I know it's a popular expression, or folks that would hold stocks, right? Have folks out there saying, I'm selling everything. Not like I'm going to sell this one stock over here that I'm like a little worried about. No, selling everything, just cashing out of the market, right? When you see something like that, and there's that sort of attitude in the market, sell now, ask questions later, I'm selling it all. I'm done with this market. It's just going down. We're down 12% already year to date. We're just in a tanking market. I don't care. Out. When you're in that sort of market, like I said, you're much closer to a bottom than a market where people are buying the dip, or the thought is, it's going to come right back, because we are in capitulation. Capitulation is, I'm selling all my stocks today. I don't care what price it is. I don't care what it's at. I don't care how much it's down. I don't care if I'm up on the stock, down on the stock. I don't care about the tax consequences of that stock. When folks start making those sorts of decisions, and that becomes the attitude in the market, I can just tell you're much closer to that bottom than you are, at any other point, because that's the capitulation stage is usually one of the final stages of a market crash or correction or whatever you want to call it, when people are just like, boop, everything's gone, okay? So that is actually some really, really dang good news in this market. Next piece of good news up here is there's certain stocks you're actually seeing some very interesting pricing action. And Corsair Gaming, CRSR, is one of those sorts of stocks, okay? Look at this stock. Year to date is down 2%. The NASDAQ's down 12%. The Russell's down double digits. Every single stock you pretty much know is down 10, 15, 20, 30, 40% year to date so far. And Corsair Gaming is down 2%. 2%. What this shows you is likely there's two things going on. This shows you that there's likely, we're running out of sellers in some of these stocks, okay? That's the first thing it likely shows you. The second thing is even more important than that. The second thing this likely shows you is there's likely, because this is a super heavily shorted stock, there's likely short covering going on right now. And that's why you get the stock holding it's massively outperforming the market right now. Massively. It's like 6x outperforming the NASDAQ right now. Better, right? Basically what happens is when you have the market tanking like this, I want to explain this so everybody understands this from the short seller perspective, because I know a lot of you guys are in stocks that are heavily shorted, or you're going to be in stocks that in the future that are heavily shorted. What happens is folks load up on shorting on the stock, right? It's downtrending, it kind of piles on. And what ends up happening is the market maybe goes through a tank cycle, a big correction or a crash or whatever it is. And the shorts start looking at that and they start saying, okay, shoot, the market's already tanking. This baby's not really going down that much. I think this is a good time for me to go ahead and cover in this sort of market, because it gets much more risky as the stock market goes down more and more. You might think, oh, that's better and better for the short sellers. No, that makes it riskier and riskier as these valuations get to levels that we haven't seen in a decade. That makes it very, very risky from the short side. Because now you're in the situation where you're like, okay, the market's already tanking. This stock's not really moving down. Maybe I'll just go ahead and cover now. I've made some good money. Let's say you shorted Corsair at 25, 27, 30, whatever, right? Like I made some pretty dang good money in this one. It's not really moving down. Let me go ahead and cover my short position so I don't end up in a situation where all of a sudden for a day or for a week or whatever, the NASDAQ or the markets come back really strong. Because likely if the market comes back really strong, let's say the market has a really good week. Let's say, next week or the week after or a week in February or something like that. All of a sudden, you can get a stock like Corsair to go up 10, 15, 20% in a snap of a fingers. And then you're all of a sudden in this pickle as a short seller where it's like, shoot, we just lost a bunch of our gains. Should we still hold on to this short? Or should we cover now? We just lost a ton of our gains. Is the market going to continue to bounce back here? And you end up in a kind of rough spot, right? Whereas otherwise, you can say, hey, you know what? Let me just go ahead and cover. Let me call it a day in this stock, because now the market's already tanking, and I'm not really looking to play that sort of game of I need the market to tank even more. So when you're seeing very intriguing price action like that, it's something to pay attention to with a stock like Corsair. Okay. Next thing, I think a lot of these things are big points. This might be the darn biggest. I'll just be completely honest with you guys. All right. Now, this article was from CNBC, and this was in mid-December. This came out, okay, mid-December. Hundreds of billions of dollars in cash have been amassed as big investors basically sold the last few weeks of 2021. And remember, this article is from mid-December, setting the stage for a massive risk-on move into equities in the new year. That certainly hasn't happened yet. We know that, okay? Investors added more than $43 billion into money market funds last week, bringing the total amount of cash raised in the past 7 weeks to a massive $226 billion, according to data from Goldman Sachs. The money market stockpile has not declined in 2021 despite the rally in stocks, with assets under management in cash equivalents standing near a record $4.7 trillion of data showed. Guess what? I would almost guarantee you the cash piles have gone insanely higher since this came out a little over a month ago. You know why? Because everybody's selling, moving cash to the sideline. A big investor says, hey, I got $25 million in stocks. I'm selling everything today and going 100% cash. Okay, now all of a sudden they got $25 million on the sideline. That money's going to come back in the market. I don't know, the big debate is, when does it come back in the market? Does it come back in the market a week from now, a month from now, 3 months from now, in the summertime, next year? Like, that's the big debate. When does that money that's all going to cash, when does it come back in the market? But one thing I can tell you that makes me sleep well at night is knowing how much cash is on the sideline now, which is ridiculous levels, and knowing that money's coming back in this market eventually. It's just a matter of time. And the market that I worry about is a market where there's no cash on the sideline. Because if there's no cash on the sideline, then you're in a market that, how do you get it to go up? If there's no money coming in, how the heck do you get the market to go up and stocks to go up? But if everybody's fearful, they all flood to cash, okay? Once you start getting in some up cycles and some bottoming trends, then you slowly start to get the folks say, okay, I think things have bottomed now. Let me put in a little bit of money. And as the market starts going up and more and more and more, then it starts to lead to a little FOMO. I don't want to call it big FOMO like we had last year. That was abnormal amounts of FOMO. But it starts to lead to some FOMO where, let's say you sold out of stocks and you got 25 mil on the sideline, right? All of a sudden you start saying, dang, market just came back 5%, 7%. Oh, this stock just jumped 10%, 20%. Yeah, man, I think we might have bottomed, and you start kind of funneling some money back in, right? And you're like, okay, I think I see an opportunity here. I think I see an opportunity there. And you start kind of investing and getting back in, right? And so, yeah, nonetheless, there's stupid money on the sideline right now, like stupid money on the sideline. And there's nowhere to put that cash. That's the thing. Real estate, no, okay? No, there's just no. If you're talking about CDs and savings accounts, they're a joke, complete joke. Bonds are a joke. There's nowhere to put your cash, okay? And if we do end up in any sort of downtrending market where we continue to downtrend for the next several weeks or next several months, Papa Pal, he's coming back in full swing, baby, okay? And so this is something to really, really take into account and think about how much crazy amounts of money is now on the sideline, guys. It's a huge number, okay? This one, I think this is a smaller thing to be positive about, but it is something to be positive about. So Rona went absolutely nuts. I mean, absolutely nuts in December and going throughout basically until a few days ago. Starting a few days ago, we just started to trend down. We just started to trend down in terms of Rona. Okay. Now, in my opinion, what's going to happen is these numbers are going to tank through the floor throughout February and March, and by this, April, Rona is not even going to be the thing people are talking about. Okay, and so that's how I see this. That's how I foresee this playing out. And so I think there is something in the algos that says Rona numbers higher, or let's say super high, sell stocks. I'm fairly convinced because I've seen the correlation in the pricing action looking at the Russell. As Rona numbers went down, the Russell went up. As the Russell went down, Rona numbers went up. I've seen a perfect correlation several times the past 6 months or so. And so, nonetheless, if you want some more good news, Rona numbers starting to go down is big, but obviously we're still extremely high, so we need to start getting back down to these sorts of levels, which is going to take us likely still several weeks to get back down to those type of levels. It's not like that's happening tomorrow. It's going to take us several weeks, and then we'll start to get to some crazy low numbers as we get more toward the spring, and I think that becomes something that's not even a worry at all in the stock market, okay? And so that's really, really important, okay? Now, I want to get into point number 7. Make sure you get your free stocks from Moomoo. While they still got free stocks over there, they're giving 5 free stocks valued up to $3,500 each. If you want access to that deal, check out the pinned comment down there, to get your free stocks, guys, and make sure you subscribe to this channel, okay? Now, reason number 7. Let's talk about weak hands, all right? So, weak hands, there's a plus and a negative to this, okay? One is, I don't think there's much for weak hands left in this market now. I just don't. I'm talking on the fund side. I'm talking on the investor side. I've even seen people that are usually looked at as strong hands, say, hey, I'm done with this market. And so I think we're in the psychology of this market. I think a lot of the weak hands have exited this market. Now, that doesn't mean people can't still sell stocks, right? You can still get other fear out there. You can still get margin calls, okay? So that's something very important. If you get a margin call and you're forced to liquidate stocks, you're not a weak hand. It's just like you got no other choice but to liquidate stocks, right? And so I think we're out of a lot of that, and I think that gives some comfort out there to the market as well. But yeah, we actually have some good news in the market, guys. I hope you enjoy this as always. Hope you got some value out of this. It's not just doom and gloom in the market, and there's always two sides of the story, and it takes two to tango, as they say. Much love as always. Make sure to subscribe, and have a great day.